Welcome to Decision Vision, a podcast series focusing on critical business decisions. Brought to you by Brady Ware Company. Brady Ware is a regional, full-service accounting and advisory firm that helps businesses and entrepreneurs make visions a reality.
And welcome to Decision Vision, a podcast giving you, the listener, clear vision to make great business decisions. In each episode, we're discussing the process of decision-making on a different topic. Rather than making recommendations, because everyone's circumstances are different, we talk to subject matter experts about how they would recommend thinking about that decision. My name is Mike Blake, and I'm your host for today's program. I'm a director at Brady Ware Company, a full-service accounting firm based in Dayton, Ohio, with offices in Dayton, Columbus, Ohio, Richmond, Indiana, and Alpharetta, Georgia, which is where we are recording today. Brady Ware is sponsoring this podcast. If you like this podcast, please subscribe on your favorite podcast aggregator, and please consider leaving a review of the podcast as well. Today we're going to talk about hiring a forensic accountant. And forensic accountants are always fun to talk to because in the accounting world, they always have the greatest stories, the greatest war stories. I mean, who doesn't love a story about white-collar crime, unless you're in it, I guess. Then it's not so great. But if you're sort of a third person that makes the best cocktail stories. So pro tip to the listeners out there, if you're ever sort of at a mixer with a CPA firm and you don't know who to talk to, ask who the forensic accountants are because they have the best stories by none. Forensic accounting is a very specialized area of the accounting profession, and it's one of the most difficult decisions in terms of deciding whether or not you're going to hire a forensic accountant, because by definition, when you're considering hiring a forensic accountant, you think that potentially there's been at least a major mishap, and in many cases you suspect that a crime has been committed, often by somebody that you trust. And so I can tell you from talking to my clients who I've referred to forensic accountants over the years, it's a major hurdle to then make that call to say, yeah, I need to get this checked out. I need to have somebody really come in and look under all the rocks and hopefully find nothing. That would be a great outcome. But then if something is going to be found, that we know exactly what it is and we can make it from there. And so to talk about that with us is Brady Ware's resident expert. Joining us today by phone from the Gem City, Dayton, Ohio, is Randy Domigan, one of my business partners at Brady Ware in Dayton. Randy works in a variety of accounting, auditing, and consulting engagements, as well as corporate and individual tax areas. He provides services to closely held businesses in a variety of industries, including manufacturing, dealerships, retail, distribution, professional services, transportation, and real estate. He leads our firm's fraud services practice and assists with recruiting and training of new team members, and serves as the head of the firm's Assurance Services Group Technology Committee. Randy is a member of the Ohio Society of Certified Public Accountants, the American Institute of Certified Public Accountants, and the Association of Certified Fraud Examiners. He also serves as the chair for the Better Business Bureau's Eclipse Integrity Awards Committee and is active with the Dayton Chamber of Commerce and the Miami Valley Venture Association. Randy is a 1994 graduate of Wright State University. After working 3 years with another regional accounting firm in Dayton, Randy joined Brady Ware in July of 1997. Randy, thanks so much for taking your time out of tax season to join us for a little bit today.
Yeah, thank you, Mike.
So I've kind of gone through your intro, but I don't think the intro necessarily does it justice. So, talk a little bit about your role at Brady Ware and how much forensic accounting and maybe chasing down white-collar criminals is a part of what you do.
Yeah, absolutely. So as Mike said, I am a director with the firm, and I do work out of our Dayton office. I do head up our fraud and forensic practice, and as part of that, I do spend a good portion of my time typically outside of our tax season, which is kind of our January through April time frame. But outside of that time frame, I spend a lot of time working with companies to primarily strengthen their internal controls. I do get involved in cases where fraud has occurred, and I do have to go in and do investigations. What I try to do, because I see the ill impacts of that on businesses and how much it can destroy a company, is I really try to get out and get in front of these things and work with companies to help strengthen controls, reduce risk, and really find ways to prevent fraud from happening in the first place. Because that's really where you want to be. You don't want to be on the receiving end of needing a forensic accountant, which of course I can do, but you want to try to be on the front end of this and try to put preventive measures in place to keep it from happening to begin with. Because unfortunately, once it happens, usually there's never a real good result.
Yeah, once that bell gets rung, it's very hard to unring it.
Absolutely.
And I got to be candid. I did not know that about the forensic accounting role. I've worked in other firms as well, and all they ever talked about was, finding stolen money or dealing with lost profits and damages and so forth. But it had not occurred to me, but it makes sense now, is that the other side of that is putting in internal controls and preventative measures so that the other side of that identity that you have is we hope, never called upon.
Absolutely. And, part of that is bringing awareness to what the issue is, because you don't know you need a forensic accountant until it happens to you typically. And so trying to educate people on the front end and show what some of the risk factors are and bringing awareness about it is part of the battle in trying to fight fraud. So companies can implement risk management policies ahead of something happening. And I've even had cases where I've gone out to do some of this consulting and looking at kind of where their business risks are and where their controls are and how they're set up, where I've actually found fraud that has already occurred and the company was completely oblivious to it.
I can imagine that led to some uncomfortable conversations.
Yes, it did. Absolutely.
So can anybody with a CPA do forensic accounting or what is there specialized training to become a specialist as you are in that particular field?
Yeah, no, that's a great question, Mike. So in addition to being a CPA, I'm also a CFE, which stands for Certified Fraud Examiner. So when I originally got interested in fighting fraud and getting into that aspect of my career, I had actually been involved on an engagement where some employee embezzlement had happened, and I went in and was basically just trying to figure out what happened. It's like, where the money was stolen from and the different ways that the individual was able to steal the money. And it really just fascinated me. And so I started looking at other ways to help sharpen my skills in that area, because just with my auditing background, it really wasn't sufficient to really cover all the aspects that go into being a forensic accountant and a certified fraud examiner. You need to understand some of the laws surrounding, how fraud is prosecuted. You need to understand what some of the things that lead people to commit fraud, what some of the those risk indicators are, and so I went ahead and went to an organization called the Association of Certified Fraud Examiners, became an associate member, and started looking at a lot of the classes and things that they offered in order to become a certified fraud examiner. And as a result of that, there's an examination I had to take and several classes, and I came out at the end of that and really started to make that part of my practice area. And
how long ago was that?
I did that back in about 10 years ago.
Okay, so you've had a decade of experience in dealing with these kinds of issues. So,
yes.
Does all fraud look alike? Is there basically one flavor of fraud, and fraud is just fraud, or does it come in different forms and shapes?
It really does come in different forms and different shapes. I mean, the term fraud can mean a number of different things. You can have fraud in the medical industry where, you have people submitting false claims to insurance companies. And I mean, it just covers so many different things, tax fraud and, refund fraud. It's huge. The area that I tend to focus on a little bit more tends to deal with occupational fraud, which is one of the most common occurrences of fraud. Occupational fraud basically deals with employees, directors, just individuals within a company that commit fraud, and it can be fraud from any direction. Typically, it relates to like something around a cash disbursement or something like that. Could be related to payroll. There's just a number of different things where fraud can be committed against an organization, but it's typically asset misappropriation. So, and that can take a number of different forms.
So, what are a couple of different forms? What are kind of the flavors of asset misappropriation? And I guess to the simple mind like mine, asset appropriation means just stealing stuff, right?
Correct. So one thing would be cash disbursements fraud. So if somebody were to write a check to themselves or to a fictitious organization that they controlled that was an unauthorized disbursement, that would be an example of a cash disbursement fraud. Another example of that would be if somebody paid themselves through payroll either an extra paycheck, they modified their pay rate where they could be paid more money than what they were entitled to or what had been authorized and approved. Again, that's an asset misappropriation because they're taking funds that have not been authorized to be taken. Another way could be inventory theft. They just could actually just go in and take something right off the shelf at a store or, within the organization. There could be equipment. Anything like that would relate to an asset misappropriation. And that's, again, probably the most common type of fraud that I tend to get involved with.
I was talking to somebody who does inventory tracking for hospitals not long ago, and they've got a company that facilitates that. And apparently one of the biggest, I don't know if you do any medical work or not, but one of the things that I learned is that for a given hospital, hundreds of thousands of dollars of stuff just walks out of the hospital. It's not like bottles of aspirin either or stethoscopes. It's like, significant equipment that just sort of goes missing. Yeah. Have you experienced that or heard of cases like that?
Yeah, it does tend to happen in large medical facilities. I don't typically get involved with those as much. Most of them have been focused around companies where they've had an employee just internally, a lot of times involved with the accounting area, where they've got access to those funds in some way, shape, or form. It could be that they're one of the authorized check signers. It could be that they are, or they have access to online banking, and they wire money out of the account. And so a lot of it's stuff that they can turn quickly into something that they can use. Don't see as much inventory theft, but it does happen because there's a market for those things. And most of those things can be easily sold and turned into cash.
So with these people that commit fraud, I think the psychology here is interesting. I've had some experience with it, just observing forensic accountants kind of across the hall in valuation and other places. What's the profile of the person who commits fraud? Are they somebody they've already been out of jail 3 and 4 times, they're already kind of a known risk, or is it more somebody that may be the first crime they've ever committed, at least on record?
Well, it can be both. That's why if companies are hiring individuals into a position of trust, it's really important to go through a very formalized and very detailed background check to make sure that somebody that you've got coming in hasn't already served jail time, hasn't been arrested or anything else for one of these other crimes. So to answer your question on the other end, yes, it can happen to just about anybody, unfortunately. Different circumstances come up in people's lives that can give them the motivation that they would need to commit the fraud. There's what's called a fraud triangle that has the different aspects of fraud that leads somebody into committing fraud. And the first thing is motivation. And, there's a number of things that can lead to motivating somebody to commit fraud. It could be that they're living beyond their means and they need additional money to help support what they're spending. Might have had a medical incident or a loved one that, was, hurt in a car accident, or they developed some disease where the medical bills just keep coming and they have to find a way to cover those bills. It could be just bad credit. They might have had a bankruptcy. They might have been divorced that just really threw their finances into turmoil. There's also things like alcohol and drug abuse or gambling, just things like that where, people have this additional need for funds that they're not able to get just from what they're earning in their paychecks every week. So, there's those types of things can motivate people to commit fraud initially. The second step is, for them to justify it. People will justify it in their heads by, feeling that they are worth more than maybe what they're getting paid. If they see maybe somebody else in the company that's making more money and there's maybe some jealousy there, they say, hey, wait a second, this person's making this much. I contribute more than what they do. I should be making more money. So that's how they kind of justify it in their head. And the other thing is the opportunity. The opportunity presents itself. It could be, that there's a weakness in the control system that allows them to do it without it being detected. And that's usually the big thing. And most people know their jobs very, very well. So they know what's looked at, and they know if they try something, whether or not they would get caught or not. And so it might start out as, hey, I just took a little bit here or there and nobody said anything, nothing ever comes up about it. And so it starts going further and it gets bigger and bigger and bigger, and it can just snowball into something very, very large.
So, all right. So now I'm listening to this podcast, and as a listener now, I'm afraid somebody's stealing money, somebody's taking money out of the till, writing fake invoices, walking out with laptops, whatever it is. As a business owner, how can I keep my eye out for warning signs that fraud might be going on? Are there any kind of telltale symptoms that you can share?
Yeah, absolutely. So one of the things business owners definitely need to be in tune with is, what their employees have access to, and, looking for changes in their employees' behavior, lifestyle, things like that. So if I'm a business owner and I know that I'm paying my accounts payable person, let's just say $50,000 a year, and they drive up in a $100,000 Mercedes car, that might be a red light that goes on to say, you know what, something doesn't look right there. And there could be a very good reason for that. However, it's those kind of things that you just need to be aware of, and aware of, changes with your employees. If you see them, a behavior change, or you see physical symptoms of something that don't look right, that should be something that you would look at and maybe say, you know what, I should probably look a little bit more into that. Another sign would be if you are having unexpected cash flow issues that just don't make sense. I mean, your sales are up from what they were last year, and you would think your profitability is up, but you can't meet payroll for some reason. You're like, wait a second, why don't we have enough money in the bank to make payroll? Or why can't we pay our vendors on time? And it just doesn't make sense to you. Or you see just unexpected financial trends in your financial statements that don't make a lot of sense. That's when, there could be a sign there that something's going on, and you need to look into it and investigate it.
When you describe that, it sounds to me like financial fraud looks an awful lot like data breaches, in that the data breach is rarely, if ever, a one-time occurrence, and the one you hear about, or by the time you hear about it, it's really not one incident, but it's likely something that has gone on sort of in a low-key, hard-to-detect way over an extended period of time. Does fraud often act like that as well, where you wind up being the boiling frog and you don't realize it until you're not a live frog anymore?
Yeah, absolutely. And, the sad part is a lot of times when fraud occurs, it's people who the owner's trust, and a lot of times have been with the company for a long time. And again, it starts out small. It's, hey, I did a little bit here and a little bit there, and nobody noticed, nobody said anything, and I figured out, hey, I can exploit this a little bit more, and I find different ways to do it, and it starts getting bigger and bigger and bigger, and, by the time you get to it, and sometimes it goes, I had one case that had gone on for 20 years, and they had no clue what was going on. And it, on an annual basis, if you look at it, it's like, okay, well, it wasn't enough to really, damage the company in any way. But in the aggregate, if you look at, say, it's $100,000 over 20 years, that's a lot of money, that the company has lost to fraud. And it was all because it was this person that was in a trusted position of authority within the organization that exploited a weakness that was there.
Yeah, and it's just, you're right. And then you think on top of that, if that $100,000 had been reinvested in the company or reinvested elsewhere, there's a multiplier effect too of lost returns. Absolutely. So in your experience, is fraud more likely to come from the top part of the organization, say at the CFO controller level, or in middle management, or kind of down on the shop floor, cash register level, rank and files? Are more places where it's more likely to occur, or does it kind of occur all over the place?
It can really happen anywhere. The larger frauds tend to happen at the higher levels of the organization. So if you have, like, say, a chief financial officer that has access and the ability to cover up a fraud for an extended period of time, those can get very, very large. Unfortunately, if you have somebody on the shop floor that's stealing from you and they're stealing scrap metal or, parts or something and they're selling them in the black market, yeah, I mean, you're probably not going to notice any major financial impacts from that, but it's still going to be impactful because, you're missing inventory, you're not getting the money back from that scrap and things like that. So, yeah, but it can happen all over. Now,
a lot of companies, of course, are subject to formal financial statement audits according to GAAP. Is it reasonable to expect that over the course of the audit that fraud will just be detected over the due course of a well-performed financial audit?
Yeah, unfortunately, it's not likely that a normal financial statement audit is going to detect most types of fraud. Audits are just not designed to detect fraud. I mean, there are aspects of the audit that will, get an understanding of how the controls and things are set up. And if they see a glaring weakness in the control system, they should be designing their audit procedures around that to detect something. However, some of these things are so well hidden and they're not large enough to really be caught in a financial audit. Most of them aren't. I mean, you have a very small percentage of them that would potentially get caught by a financial statement audit, but a forensic accounting engagement or audit really will dive deep into the specific areas where there is risk after an analysis is done. And so, it just unfortunately doesn't. And a lot of people think that because, hey, I have an audit done, I should be really good and I don't have to worry about fraud occurring. That's just not the case.
Yeah, I think that's right. And my recollection is if you carefully read a standard financial audit engagement letter, there's typically language that says, we're not necessarily going to detect fraud. That's a separate exercise. If we stumble upon it, great, but don't rely upon this exclusively to find that kind of issue.
That is correct.
So okay, so let's say now that I'm a business owner. I commission a fraud engagement, and I find something. What typically happens then? Do you call the cops and they just sort of cuff the person? They walk them out of the store, or what happens then?
Yeah, I mean, I think it's going to vary depending on what type of fraud it is. I mean, obviously, if it's something very egregious and somebody is continuing to do it, and if you don't get them removed immediately, further damage is going to occur to the company, then yeah, you're going to want to take some immediate steps to get that person out of their ability to do that. However, most cases, if if you hired somebody to come in and kind of do a fraud checkup, that's kind of what I'll call it, and they happen to discover a fraud, first thing you should really do is get an attorney involved that has got experience in dealing with these kind of matters. And, you need to look specifically for an attorney that has experience dealing with fraud situations, because there are various federal and state laws that cover fraud. Now, again, if it's somebody that, you found stealing money out of the till, obviously you get them out of there immediately, because you don't want to continue to incur losses as a result of them taking that, or, stealing inventory out of the back room or something like that. But this is really more for, having somebody that's in a position of trust that might be, stealing through the payroll system or the, cash disbursements and things like that I described a little bit ago. You really want to have somebody get involved that knows, the different areas that can be attacked to try to recover the funds, because obviously the end result is you want to try to recover as much as you possibly can. Unfortunately, with most frauds, the people have spent the money already. And so you have to have other ways to try to collect, and attorneys know how to go about doing that. And so you definitely want to get them involved on the front end.
Yeah, I've noticed that. That's very unfortunate about the people that commit fraud. They're not very good savers and investors.
No, they aren't.
They've never invested it into a wise portfolio of a diversified of stock and bonds and have real estate and stuff. They bought a Tesla, or they paid for a cruise to Easter Island, or they bought a solid gold trailer or something like that. It's rarely something you can just say, well, I'll just write you a check and pay you back, and off you go.
First class plane tickets for a trip to Europe. I mean, those are the kind of things that typically the money's spent on.
It's kind of interesting, the psychology. So, and I would imagine that attorney that you call, or maybe it's more than one attorney, because I got to imagine there's an employment issue too. If you accuse somebody of fraud, and then you're going to fire somebody for cause, you better be right, or you're in a world of hurt yourself, right?
Yep, absolutely. That's why you really want to try to get those attorneys involved quickly to mitigate risk to the company and any potential additional losses.
Now, what if I suspect fraud, I bring you in, and you come back and you say, you know what, all this stuff is explainable. I mean, yeah, you ought to improve some processes and some transparency, but it doesn't look like anybody stole anything. Mm-hmm. Is there a risk of fallout within the organization after you've done that? Have you kind of hit the nuclear button and then you've got other organizational problems to solve? Or can you do that in a way that's discreetly so you can kind of get in and out and very few people know you're even ever doing that or suspecting anybody of fraud?
Yeah, no, Mike, that's a great question. And it's something that we run into a lot, especially when the owner wants to just kind of have a checkup done. Come in and kick the tires and see how the controls are set up. And if you find something, let's talk about it. That's how a lot of the engagements go. So if you've got somebody that is that's good at, working with employees, and, the narrative comes out as to why, somebody's there and somebody's asking questions and looking at some different things, you can definitely get around some of those concerns of, having the organization just have major shakeup because, somebody's in here investigating a fraud or something like that. So there are definite, ways that you can go about that to mitigate that with, employees and personnel within your organization. You just have to make sure that you have the right person to kind of talk through what your narrative is around it. So a lot of times it can be, hey, we're looking to, redo our insurance policy, and they want us to look at some of our controls and policies and things like that. It could be that, hey, this is done in conjunction with our, year-end audit, and they're doing some other steps to look at some different things. I mean, there's a number of ways you can go about it to help mitigate any of that fallout.
Now, are there certain kind of businesses that are more vulnerable or less vulnerable to fraud than others?
Mike, just about every business could be susceptible to fraud. Now, if you do everything in your company and you write all your checks, you take care of all the accounting, you ship all your merchandise out, you have nobody else involved in it, and you're kind of a one-man shop, you probably don't have to worry about too much fraud occurring within your organization. But as soon as you bring on somebody else, even if you're a pretty small company, you have susceptibility. And, unfortunately for smaller companies, they tend to have larger frauds occur because they do have, maybe one person doing a lot of the different jobs that, typically in larger organizations, they can move around to different people to help, increase the controls around a lot of those key areas to try to mitigate fraud risk. But even with a small company, there are some very, very practical things that business owners can do to help mitigate the risk. And, there's a couple more things that might have to be added to their plate or even other employees' plates, but it's very easy to do without adding additional cost or headcount into even small organizations to help really mitigate fraud risk.
Well, that's a great entree then, because I'm sure our listeners would like to understand. Is there a short kind of punch list of things that owners can do fairly easily to reduce their exposure to fraud?
Yeah, I would say that there's definitely some things that they can do. I mean, where you see fraud that has gone rampant, it's typically because there's very little oversight by the owner on any of the financial records. And it does happen a lot in small businesses. You have a business owner that is out trying to do sales, is out, trying to make sure that if it's a manufacturing, that all the product's getting where it needs to go, even if it's a distribution, that they're managing, shipping and all those other different things. And the last thing that they want to have to worry about is, okay, who's paying the bills, and did we get all the, the money collected from our customers and things like that. But when there's no oversight there at all, that's where the risk exponentially increases. And so, yes, there are definite things that, business owners can do that would help mitigate that risk. And again, it's not a lot of additional time that they would have to spend in it, but some very simple things that you could go through. And it really just depends on each business. So it can't just be some blanket thing that, okay, well, yeah, if everybody does this, that's going to, reduce your risk for fraud. Yeah, there probably are a couple general things that you could do, but each company is just going to be real different because, they're going to have different levels of employees, different levels of knowledge, different facets within their business where, they've got risk of, for fraud to occur. So really needs to kind of be specific to each company when you look at it.
Right, because the nature of the fraud that can occur is going to be different from a burger restaurant to, say, an auto dealership.
Absolutely.
Okay. So we've covered a lot of ground today. We probably could cover a lot more, but
Yes.
time is finite. So if somebody wants to contact you for more information, can they do so? And if so, how can they find you?
Absolutely. The best way to contact me is probably through email. My email address is rdomigan@bradyware.com, and it's RDOM as in Mary, IGAN as in Nancy, @bradyware.com. You can also contact me at my Dayton office. The number is 1-800-893-4283, or you can visit our website at www.bradyware.com. And you can go through the services link. You can find fraud there, and there'll be a link directly to me on that website as well.
All right, very good. Well, that's going to wrap it up for today's program. I'd like to thank Randy Domigan of Brady Ware so much for joining us and sharing his expertise. We'll be exploring a new topic each week, so please tune in so that when you're faced with your next business decision, you have clear vision when making it. If you enjoy these podcasts, please consider leaving a review with your favorite podcast aggregator. It helps people find us so that we can help them. Once again, this is Mike Blake. Our sponsor is Brady Ware Company, and this has been the Decision Vision Podcast.